Hi, this is Mark Patterson with MHP Asset Management, and I'm here to give you end of the second quarter kind of update, looking forward into the third and fourth quarters, what I see, what I'm listening to analysts talk about, and see if this all makes sense to you. So anyway, obviously the first and second quarters of this year have been really very interesting as a money manager, and I'm sure you as a client have found it quite interesting and exhilarating at certain times, also scary. So anyway, but I wanted to talk about the volatility that we've had. We've had a tremendous amount of volatility in March, April, and I mean even today, a down 700, 800 point day and up 800 point day on the Dow has become pretty commonplace. It's all data driven, it's news driven, it's the news of the day that drives the markets up and down. You know, is there a vaccine? No vaccine. Are we reopening? Are we shutting down again? It's all just day to day, and it quite honestly makes my job very difficult trying to find quality positions to put you all in. But let's talk about some stocks first. So anyway, ever since the correction, we've seen some of the really quality growth stocks drive this market back up to actually higher levels than it was before. In the NASDAQ, for instance, companies like Amazon, Apple have seen new highs. But then again, if you look at some of the value stocks, they have not returned. They've only gotten about halfway back to where they were. So anyway, from a strategy standpoint, what I want to do, certain growth stocks I'm going to leave in place because I believe that they will continue to do well. But I'm going to shift some money over to value, some of the stocks that were kind of left behind. Maybe I'll use covered calls to take some profit off of some of these growth stocks. Maybe I'll just sell them for profit. Maybe I'll do nothing at all. It depends on everybody's account is managed individually for them. But anyway, I want to talk about the bond market a little bit because I've traditionally done a lot of bonds for income. And the scenario now, interest rates are so low. I went into the CD market the other day just to look at what CD yields were doing. And I know that at the banks they're extremely low. But even I can typically find a little more yield going out. I can look at banks all across the country. And right now, the 1 year yield on a 1 year CD is 20 basis points. That's 0.2%. I mean, you might as well just keep cash fully liquid in your account rather than 20 basis points for the year. So the thing is Treasury bills are also not paying anything. On the corporate side, if you go into BBB, which is just into investment grade, yes, there is some yield there, but there's also some risk there because back in March, when this market took a dive, just like 2008, 2009, some quality bonds, you know, they were investment grade quality, fell into junk status overnight. Now, a lot of those have come back and have done fine, but some of them are still, you know, not in the level where they're giving me total comfort right now. So anyway, with new money, I mean, we have bonds maturing, we have new money coming into this market. It's very challenging on the bond front because I want to upgrade the credit quality in the portfolios, but along with that comes less yield. So I'm trying to find ways to increase the yield into your portfolios, but not take on any additional credit risk in the portfolio. So anyway, I want to talk about the uncertainty of the markets coming up in the third and fourth quarter. And when I say uncertainty, that's the one thing that the debt and equity markets do not like is uncertainty. So we've got this election coming up in November, but all the news leading up to it is also creating uncertainty in the markets. And it doesn't matter who you vote for. That's not what I'm talking about. But you know, some states are pushing hard for mail-in ballots. That's great, but it could take quite a while to actually unravel who won the election after this. And during that period of time, I believe these markets would feel a lot of angst. Leading up to the election day, I believe the markets are going to feel a lot of angst and uncertainty. So anyway, it's just a good reason to keep cash in your accounts. I believe there's going to be some fabulous opportunity in the third and fourth quarters of this year. And I believe that, there again, I have always felt that we're going to go down and maybe not retest the lows of March, but somewhere down in that range. If that happens, that to me will be a very good buying opportunity, a time to put money into this market, because I think after that, I think typically that's when you see the markets recover for another maybe run of a bull market in time. So anyway, this has been Mark Patterson with MHP Asset Management, just giving you a second quarter review and maybe a preview on the upcoming third and fourth quarters. I'm always there for you. If you need to talk or you want to talk, please just contact me. Otherwise, I'll be speaking with you all soon. Bye-bye.